our alpha manager for the day. Then Anand Shah, Deputy CEO and Head of Investments at Bnp Paribas Mutual Fund, is with us now. Anand, hi, good afternoon. So, the highlight of the last fortnight has been this recovery that we are seeing in the broader market. The mid-cap index outperforming, small-cap index outperforming, so many stocks bouncing 10-20% from their 52-week lows. Now, your thoughts, is this indicating that perhaps there's some kind of bottom in the market, or is this one of those sort of rallies, the bear market trap rallies that we normally see?
Hi, very good afternoon, Anuj. I think, yes, you're right to that extent, and this has always been the case. It's not that market have fallen, but yes, we are seeing more semblance. Not only large caps, we always had winners within the large caps also, but more recently we also have winners within the mid caps and small caps also. Partly also because fundamentally, if you see, we have seen liquidity coming back to some extent. Also the impact of monetary policy and available liquidity is also going to help, plus few measures already taken by government. So overall, yes, I agree with you to some extent that while we can't say that the worst is over for the economic point of view, I think slowdown continues to remain bothering. And to that extent, we might not look at the V-shaped recovery, but yes, there are specific sectors and companies which have seen the worst behind them.
Okay, and Anand, good afternoon. What would those sectors be? I'm wondering if consumption is one of those sectors, because in this environment of gloom and doom, you just raised money for a consumption fund. I think you raised around 400 crores. So is consumer one of those sectors that you think will recover earlier than others?
Yeah, we actually raised that money a year back, and we had a very pleasant, sort of experience for our investors in that fund. What is happening is, I think, while overall we are seeing slowdown in the consumption, we are, as I said before, we are seeing selectively companies in each sector. So while some of the sectors are really, we haven't found the winners, but otherwise also where we have seen a slowdown, we have been able to find a couple of companies here and there which continue to do well in this challenging environment, partly also because they were prepared, partly they had a strong balance sheet where they have put that to use to gain some market share at this point of time. So yes, overall our consumption fund has been quite resilient in last 12 months, and it continues to outperform and do well for the investors at this point of time.
I see a lot of insurance names in that list, Anand. But stocks like ICICI Pru, HDFC Life, they've had a big rally. You think this is still a sector offering good risk reward at current levels?
Yeah, so I think there are very few sectors we can say which secularly looks good, and insurance is one of them. Otherwise, in every other sector, it's more of a stock picking which is working. But we believe in life insurance. I think the penetration is quite low. I think more importantly at this point of time, while traditionally it's been a ULIPs and it's been an investment and savings product which were doing very well, I think more what we are seeing recently is a change where we are seeing more growth in protection, which is actually a fairly profitable business for this life insurance company. So I think one, obviously penetration is low. To that extent, there's a scope for continuous growth for long time to come. But also because protection will become a larger share of the overall insurance underwriting, I think it's also going to become more profitable. So I think, yes, it's done well as a sector, but from a longer term perspective, from a prospects of growth and prospects of profitability, I think this sector continues to look good vis-a-vis what we see in the rest of the economy at this point of time. So I think also it's also relative. I would not say that absolutely they are going to do extremely well, but yes, relative to what we are seeing in the rest of the segments, be it in finance, be it in consumption, I think this sector has far better prospects than the rest of the economy.
Okay, so positive on life insurers, that's the other takeaway. Now, Anand, if I look at your multi-cap fund or the mid-cap fund, I'm seeing some auto-related names out here. There is Endurance, there's Exide, there's a Sundaram Fasteners. Now, I don't know, have these been recent additions? How are you looking at auto and auto ancillary? Because prices are low. The question is whether you believe that there's a turnaround somewhere coming close.
I think as we spoke before also, and we see auto sector actually undergoing multiple challenges at this point of time. So it's not only one thing. We hear a lot of stuff on auto saying, the millennials change the ways. But I think the way we see as a sector, I think we had a very good growth in 16-17. So we had a high base effect. At the same time, there was some sort of a disruption in the entire financing value chain, when we see NBFCs were sort of triggered a sort of a mini crisis last September. So I think a lot of things coming together has been sort of hindering at this point of time the overall growth of the auto sector. But as I said before, I think we will be able to see that some of the companies were well geared through diversification, through having more content per vehicle, or through having more clientele than what they had before. So a lot of stocks which we see in the portfolio might not be a view on the sector, but there might be actually a view on individual companies which would have done few things right, even amidst that the sector is struggling. So if your question is how do we see auto sector, I think it continues to remain under our observation. We are not clearly seeing a V-shaped recovery in auto sector anytime near.
Okay, you can correct me if I'm wrong, but I don't see any IT stocks in your large cap fund, Anand. Are you underweight on IT now? And if yes, what's the reason?
I think we fairly like the IT sector. It's one of the very few sectors where, while the growth is slow, but remains very high on free cash flow. Is not levered at all. None of the IT companies are levered, but I think free cash flow is very high. Return on investments, ROEs, ROCs are very high. And they've been fairly competitive globally. So while overall there will be some slowdown every now and then in the IT spending, given that the profitability and the global growth is challenged, so it's levered to the global growth. And yes, we are seeing some slowdown on the overall IT spend, but within that the Indian IT companies have an edge. They have been gaining market share. They continue to outperform the overall IT spending growth rate. So I think that sector is, in a current environment where the local domestic growth is also challenged, is relatively, still attractive. And we do have IT in our portfolio, so I think it's a miss somewhere. But yes, we do own quite a lot of IT in our large cap fund.
Okay, so talking about the large cap fund, obviously banks form the lion's share of the holdings, Anand. Not just in the large cap fund, but even if I look at the consumption fund, then your top two stocks I think are banks. Yeah, HDFC Bank and ICICI Bank. So what's the expectation going forward? And I also don't find too many tier 2 names, tier 2 private sector banks. You want to stick only with the biggest of them all?
I think they also reflect the competitive strength of those individual companies. As I said, while we might like a sector, might not like a sector, but in each sector there can be winners and losers. So while we like generally the private sector banks, if you go back 2 years, if you had asked me, you are largely looking at private sector banks, and that too within which they have largely retail oriented. 2 years, if you had asked me, you are largely looking at private sector banks, and that too within which they have largely retail oriented asset book, because that was something when we are at the peak where we expected corporate NPA cycle to rise. Today as we speak, I think we are also quite sanguine about where we are in terms of overall net NPAs or NPA cycle as far as the corporate sector is also concerned. We believe we are at a fag end where we have seen most of the stress in the large corporates, and infrastructure side is very well known and is in the balance sheets of the banks. It's well provided for. So I think we have moved from owning only the private sector retail bank. We are now also looking at opportunities with the private sector corporate banks, wherever we are seeing a growth to some extent, while it's not as good as it used to be, but still it's, as I said, it's all relative basis. the private sector banks still continue to grow fairly well compared to what the overall banking industry is growing. I think the other aspect which also needs to be understood is we invest for the future. And also it's very important that the banks we invest in today are ready for the future, because we will see as we go forward quite a lot of disruptions, be it by the fintech companies, be it regulatory changes. So I think we've been sort of evaluating all the small and the big banks, looking at their ability to compete today as well as in the future date. And in light of that, there are not many banks which will go through that filter. So that's been the reason why we have very few banks in our portfolio.
Okay, Anand, we'll leave it on that note then for today. Thanks very much for joining in, and it's been good talking to you. We'll catch up again soon. By the way,